Trailblazers, Michelle here. Did you guys get your PPP, the Paycheck Protection Program loan? Well, congratulations. Today I'm going to walk you through how to account for that and how to record it in QuickBooks Online. All right, let's dive in. For those that don't know me, I'm Michelle Edwards, CPA and owner of Trailhead Accounting Solutions. I'm so excited that you guys are here today. All right, so in QuickBooks, I guess we'll start. Some of you, your bank's required that you set up a separate bank account to keep track of this loan funds. If your bank did not require it or you did not set up a new bank account, no worries, just you're going to skip this step. But if you did set up a new bank account to keep track of your PPP, we're going to come under here to Accounting and Chart of Accounts. The chart of accounts is a listing of all the income and expenses and other accounts that are in your QuickBooks program to track your money. So we're going to come over here and click the green New button. We're going to select Bank, and most likely you set up a checking account, but if it's a savings, you can check that. We're going to call it the PPP Checking. Oops, I don't think I spelled that right. Okay. And save and close. So then you'll see on this list, once it populates, that we've got the PPP Checking, a new bank account set up. All right, now for everybody else, you guys can join in here. So then the next step is going to create an account so that we can keep track of the loan and record it on your books. So same thing, you're going to click the green New button, and then you're going to come and select a long-term liability. Now, if you have a larger account, a larger company, and you're tracking short-term and long-term liabilities, I'm assuming that you'll know how to go ahead and track that. But for today's purposes, we're just going to put it all in one long-term liability account. We're going to name it the PPP loan. Save and close. All right, so you can see we have the new checking account set up here, and then if you scroll down to our liabilities, you'll see that we have our PPP loan set up down here. All right, so let's say the funds came in on Monday, so we're going to make a bank deposit. And I apologize, the internet's running a little slow today. All this homeschooling going on. All right, so the bank account, if the funds just came into your regular bank account and you're just using your regular checking account, then you're going to want to pick that. If you set up a new PPP checking account, you're going to select that. For today, I'm going to go ahead and use this PPP checking because it's going to make it easier for you guys to see what's going on. Okay, and you're going to pick the date that the funds hit your account. We're going to pretend like they posted on Monday. And then you're just going to scroll down here to add funds to this deposit. Okay, and you're going to enter the bank that it came in from. We're going to pretend like we bank with Chase. Oh, I got to set it up. Okay, the account is going to be that new account we just set up, so the PPP loan. I like to add a description. I think it's helpful if you ever have to go back in time and look and see what was going on. So we'll go ahead and tag it to PPP loan. And the amount, let's pretend that we got $100,000. Okay, save and close. All right, so let's look behind the scenes and see what's going on here. So we're going to pull up reports. And we're going to go down to balance sheet. And we will pull it through the end of the month. All right, so you can see up here on the top of our balance sheet, this is where all our bank accounts are listed. And you can see that we have a PPP checking account with a balance of $100,000 in it. Then we're going to scroll down here to the liabilities. The liabilities basically is a fancy word for money that you or your business owes somebody else. So you guys technically owe this $100,000 back to your bank. right? Because it's a loan until it's forgiven. So it's going to say here, you can see it right here, PPP loan for $100,000. All right, so the clock is ticking. We're going to start spending our money. I'll just show you a couple examples how to record this stuff, but I have to watch a different video if you guys need more details on how to enter expenses and stuff into QuickBooks. So we're going to come in here and we're going to create an expense. All right, and let's say we're going to pay our first rent expense. So now keep in mind, I'm assuming if you've already applied for the PPP, you understand the rules, you know what you can apply for forgiveness for, but if you need a quick refresher, there's basically 4 things that you can apply for forgiveness. The first one is wages, so that's all your payroll, so gross wages you pay employees. With that, you can also include any state and local payroll taxes that you pay, so state unemployment insurance. I know like the city of Denver has a local employment tax, so any state and local employment taxes. With wages, they're also saying you can also include health insurance and any employer matching for 401ks or retirement accounts. So that's all under wages. You can also apply for forgiveness for mortgage interest. This is not your home mortgage interest. This is if your business owns the property that you guys work in and has a mortgage on that property. The interest payments on that, any rent payments for the place that you guys are renting for your business, and any utilities for that business as well. All right, so we are going to pretend that we are, oops, let me start this over. Sorry, I can't talk and do this at the same time. All right, so let's create a new expense. We're going to pay rent, okay? And we're going to tag this to that. So you're going to click on expense. And our landlord is Hall Properties. Now, if you have a separate bank account for your PPP, this is where you're going to pay it out of. You're going to select that bank account. If you just put the money in your operating and going to pay it out of your operating, no big deal. You'll just select your regular checking account. Today we're going to use our PPP checking. We're going to pay rent on May 1st. We'll say it was check number 123. The rent expense is going to be our category. This is for May rent. And let's say we pay $2,500 in rent. Save and new. All right, so then we're also, let's say we have a utility bill that came in from PG&E. So we'll go ahead and record that. That came in on May 15th. We used 1234 check number for that, and this is going to be utilities for gas and electric, and let's say that was $125. So you're going to just post all of these expenses as you normally would. There's a lot of kind of chatter online and around different opinions on how to account for all of this. I guess my suggestion is keep it as simple as possible. There's a lot of suggestions out there to make this really, really complicated, and I don't think it has to be. The banks aren't going to ask for a copy of your QuickBooks file. They want to see copies of receipts, reports, cleared checks from third parties, right? Because you can put whatever information you want in QuickBooks. So the bank's not going to want to see your QuickBooks file. They're going to want to see, you know, those cleared checks to show that you did pay rent. They want to see invoices from your landlord, from your mortgage company. They're going to want to see, you know, invoices from your utility statements to see, you know, the dates that you're paying for and the amount, and that it all lines up. They're going to want to look at your payroll records, you know, any of those reports that get pulled from running payroll that details out who you paid, how much you paid, the tax breakdown. They're probably going to want to see your quarterly tax filings as well. So I'm not sure you need all of this fancy stuff in QuickBooks because they're not going to look at your QuickBooks file. The other thing that I'm thinking with QuickBooks is there's some chatter out there on using class tracking. If you're not using classes, then go ahead and set up a class, no big deal. It'll help you tag all of these basically to a PPP account. If you are using classes already, let me tell you why I advise against it. So the whole purpose of QuickBooks is to have reporting so you can track the financial side of your business, right? So I know me personally and a lot of my clients, we look at numbers and compare. What was our payroll expense last year to this year? We're going to look at it compared to the future year when we're budgeting, when we're thinking about the company. And if we start moving these around and start tagging them differently, the reports that we are used to looking at aren't going to work. So for example, let's say you're using class tracking because you have different departments or because you have different locations. So let's use locations for an example. Let's say you have an office in Denver, an office in Boulder, and an office in Golden. So you track with your classes all the income and expenses for Boulder, Denver, and Golden. So then at the end of the month, at the end of the year, you guys can pull up reports and you can see how profitable each location is, right? You can look at the profitability of your business as a whole, and you can also break it out as profitability for each department. Well, if you set up another class to track this PPP loan, now all of a sudden all these expenses, instead of being in the correct department, in the correct office, are now tagged to this PPP. So in the future, when you're looking, doing budgeting, or you're trying to figure out how much your payroll cost is, and you're looking year over year, and you pull a report for the Boulder office, 2020 is going to look a little wonky because all of that payroll is no longer tagged to Boulder. It's now tagged to PPP, which is totally useless in running your business, right? It's a regular business expense. I get that things are a little wonky right now. We're all doing the best that we can. Business doesn't feel normal, but we're all hoping we can pull through this, and we're going to need good reporting to look at. So, long story short, I think tracking this through a class is extra work, and it's going to mess up your financial reports. So I wouldn't suggest it. Just record all of your expenses as if it was just normal business expenses, which they are. They're nothing new because of what's going on. All right, so we're going to close this out. Excuse me. All right, let's go ahead and record payroll, and then we will show you what's going on, okay? So I like to record it through a journal entry. Most of you, if you're using Gusto or another service, Patriot, or probably it's just automatically kind of feeding in here. 515 is fine, I guess. So we've got wages expense. Let's say our payroll is $40,000. We've got payroll taxes. Oops, I can't type. Let's say the payroll taxes are $4,000. We've got our payroll taxes payable. The employees portion, let's say they pay $6,500. And then all of this is going to come out of our bank account. And again, we're going to use the PPP checking. If you're using your regular checking, no problem. Okay, so now we've got payroll recorded. So then let me show you on the reports what this is going to look like. So let's pull up a new balance sheet. So we just started entering stuff in April, so let's start there. Oops. And I'm going to pull this through. We didn't put any expenses in June, but I'll just show you. And I'm going to pull it by months, so then you can look month to month what's going on. It's kind of a fun trick. I like to see this because you can compare month to month, and it's an easy way to find errors in your system. All right, so we can see, we're looking at our balance sheet, that we have our PPP checking. Here's the $100,000 that came in April. And then we started spending, right? In May, we had payroll expense, and we had rent expense, and we had utilities expense. And we paid it out of our PPP checking. So now we only have $59,875 left in our PPP checking account. If we scroll down a little bit further, we can find our PPP loan. Notice it's still staying at $100,000. And that is because you haven't made any payments back to your mortgage lender yet, right? You get payments deferred for 6 months. So you haven't made any payments. So even though you're spending that money on payroll like you're supposed to, your loan, you still owe $100,000 back to the bank until it is forgiven. So that's going to stay at the $100,000. Okay, and then let's look at our profit and loss. And you can see what's going on over there. So again, reports, profit and loss. And then let's look from April through June. And we'll do it by month. Red report. All right, so you can see that we have our payroll taxes and our payroll. Here's our payroll down here, are the utilities that we ran, and the rent expense that we ran for May, right? So it's just showing up as a normal business expense, which they are. All right, so then let's say it is past your 8 weeks, you've spent the money that you can, and then you applied for forgiveness from your bank, okay? The bank came back and said they are going to forgive $80,000 of your loan, okay? So you took a loan of $100,000, they're going to forgive $80,000. So now you have a $20,000 loan to pay back over the next year and a half. So let's record that. So we're going to come up here and we're going to do another journal entry. So let's say we heard back from the bank on June 5th or July 15th about our loan forgiveness. So we're going to go to our PPP loan and we're going to reduce that by $80,000, the portion that they forgave. So you're going to debit PPP loan for $80,000. Description is going to be PPP loan forgiveness. Okay. And then the next place, we're going to want to set up a new account. It's going to be an other income. Now, other income is super important because you want it to show up at the bottom of your income statement or your profit and loss report. Okay, you don't want this up at the top. It's showing, you're going to get confused if you actually had $80,000 of income for your year, right? You don't want that showing up with your business. So you're going to put it at the bottom. It's going to be in a miscellaneous income, and you're going to call this PPP loan forgiveness. And then you can add non-taxable at the end, and this will be great when your tax person gets your financials at the end of the year, and they'll know that this is not taxable income. So you're going to pick your loan forgiveness non-taxable income as your account, and you're going to credit that for $80,000 for your loan forgiveness. So we're going to hit save and close. All right, so we have our income statement already pulled up. So remember to do this, you're going to hit reports and you're going to go to profit and loss. Let's see what's going on here. Okay, and we're going to go through July. I like to break it out by month so you can really see what's going on. I think it's easier to see than a lump sum. Okay, so we've got all of our regular business expenses happening January through March. May, we entered our payroll expenses, remember? And then now here in July, we applied for forgiveness and we were granted $80,000 forgiveness. So you can see it's showing up as other income for $80,000. Excuse me. And the great thing again about this using other income is it shows up on the bottom of your report. So if you want to see how your business is performed, you know, the top section is all how your business is functioning, and then you can come down here to net operating income. This is kind of wonky because it's a sample file, so there's no data for April, May, and June anyways, but they're showing right now that they operated at a negative $42,000 loss this year. So this business definitely has been hugely impacted by what's going on. Then you've got the loan forgiveness down here, and then, you know, for the ending of your income business is $34,000, but you didn't really make $34,000 because you had this big loan forgiveness. All right, so let's look at our balance sheet. And you can see what's going on from there. we can pull it through July. And I like to look at it by month. Run report. All right, so you can see here's our PPP checking account. We had the $100,000 that came in April, and then we paid a bunch of expenses in May. Now, if this was truly your company, you'd have more expenses in May and more expenses in June, and I would expect this to be about $20,000, assuming that you used all the money on things that you were supposed to get forgiven. But we didn't record everything since it's just a sample. Then we're going to scroll down here to the liabilities, and you can see you've got your PPP loan. So remember, we got the $100,000. We spent some money, but that didn't change the loan amount, right? The loan amount finally changed in July when we applied for forgiveness. So they forgave $80,000 of the loan. Now we still have $20,000 that we have to pay back. Okay? So then, going forward, you're going to start getting notices from the bank that you have to pay back this $20,000. So every time you make a payment, we're going to go up under here and report as new and hit expense. Now, again, if you're a bigger company and you're tracking your interest payable, you're going to want to do this a little bit differently. But for most small businesses, this will work just fine. So the loan was through Chase. We're going to pick Chase. We have money left in this PPP checking, so I'm going to go ahead and pay it out of there. And you're going to put it to against your PPP loan. That's going to be your principal payment. Let's say that we pay $1,500 a month back. And then we want an interest expense. I think we need to create that. So it's going to be an expense. Okay, so we created our interest expense, and that is the interest on the loan. And let's say we're paying, I don't know, what was 20,000, 1%. Say our interest payment is $200 for the month. So we're paying $1,700 a month back for this loan. So we'll hit save and close. Oh, I don't know what date I posted that on. So let's go ahead and pull our balance sheet again and see what's going on here. All right, so we made our first payment in July. So you can see we've got, again, the $100,000 loan came in. We paid expenses, payroll, utilities, rent, and then in July it went down some more because we made our first payment. And then you can come down here to the liability section and look at the PPP loan. And you can see we've got our loan. It was forgiven down to $20,000, and then we made our first payment, which then reduced the balance down to $1,850. Okay, and then the interest expense portion will then show up on your profit and loss under interest expense. So I can show that to you too, as if you're interested in seeing that. So reports, profit and loss. Let's run it through July. 5 months. Run report. And you can see we have our interest expense. Should just jump right out right here. $200 in interest expense. All right, I hope that helps you understand how to post your PPP to QuickBooks Online. If you have any questions, definitely put some comments down below. If you learned anything new, give us a thumbs up. Thanks for watching. Have a great day. Bye-bye.